Fantastic. Welcome, everybody, for another session in learning Forex from the master Krishak. Uh, I see we have a few people here: Alejandro, Carmen, Sufyan. Thank you for being here. It's always a pleasure. For those of you that are on the call, today is doing things a little bit differently than we normally have. We have decided to shorten our sessions to 30 minutes. We're hoping that we can get a little bit more participation in this valuable, amazing free session. And what we're going to be doing moving forward is Mr. Krishak is going to be giving us the fundamentals and basic knowledge of what Forex market is. And we're going to have sessions of 4 sessions. And what we've decided to do is add small groups now. So instead of going on one-on-one, if you're still not 100% sure this is what you really want to do, we're doing small group sessions of 4 people, and they are only $25 to join that group session. So $25. It's normally $50 of what we normally charge for the group sessions. We're gonna give a 50% discount and charge you guys only 25. That's a group of 4 people. I can call it like a semi-private. You'll have opportunity for Q&A and learning a little bit more in depth about what the Forex market is. And then if you want to become a trader and take it to the next level, then of course we have the one-on-one sessions where you will do most of your learning. And I personally can vouch for Mr. Krishak. I took one-on-one sessions with him for several months. An amazing instructor, and I won't keep this floor going on much longer because I know we are short on time. So, Krishak, I'll go ahead and hand the call over to you. Thank you for being here, and thank you for all you do.
Thanks a lot, sir. Thanks a lot for this wonderful introduction. Again, it's an honor to be a part of QBN and again to be in touch with you and do a lot of sessions together. We have done a lot of one-on-one sessions as well, and
Yes.
seeing your journey again, it's been really good as to how you are able to trade by yourself now. After we have done a number of sessions, and this is what I am watching for all the QBN clients and members as well, that we are here or I am here to help them understand the markets and make them an independent trader and an investor. This is in terms of foreign exchange and any asset class, but we mainly will be focusing on foreign markets because I personally trade foreign exchange. I trade currencies. I do trade commodities as well, right? But my main focus is, of course, the foreign exchange. And I'm in the markets for around about 7 years now. I've been trading profitably for the past 7 years. This is what I do full time. And I'm here to share the knowledge and I'm here to, help people out there to trade and master a skill.
Quick question for you. Isn't the Forex market, and I remember this at the beginning of our session, the largest trading platform in the world beyond the Nasdaq, beyond the crypto? How much is traded a day in the Forex market?
Very good question. I would like to share my screen to explain that question so everybody can take notes as well. Let me know if you can see my screen. I hope my screen
Yes,
is
we can.
visible. Okay, perfect. So let's look at the foreign exchange. Now, foreign markets is trading currencies, one currency with the other currency. So, one currency with currency. So this is one currency against the other currency. So the total traded volume, this is per day, is around about 7.1 trillion USD on an average,
Wow, wow, wow.
making it the largest financial market in the world, well above the Nasdaq, well above New York Stock Exchange, commodities, crypto, whereas the market cap for crypto currently is $2.5 trillion. This is the current market cap for crypto as we speak. And the market cap for Forex per day, or the total traded volume per day for FX is $7.1 trillion. So we are tapping into the largest market in the world. We are not playing with small money. It is very easy to really understand Forex. The reason why is Forex markets consist of seven major currencies in the world with US dollar, euro, British pound, Japanese yen, Canadian dollars, Swiss franc, and Australian. One, two, three, four, five, six, seven. These are the seven major currencies in the world when we look at the foreign exchange. Now, some of you might say that Chinese yuan is also a major currency, but why do we not include Chinese yuan as the major currency when we are trading Forex? Is because there is not enough volume when it comes to Chinese yuan, right? Most of the transactions that we see around the world, that these are global transactions, usually happen in US dollar. Is US dollar the most valuable currency? If anybody can answer, this is a question for everybody. Is US dollar the most valuable currency in the world, or is it the most dominant currency in the world?
Most dominant.
It is the most dominant. It is not the most valuable. It is the most dominant currency in the world. The reason why is most of the trade deals around the world happen in US dollar. So when we look at the chart, when we look at the currency chart, it's always US dollar versus all the major currencies.
Before you move on, I sometimes hear that the New Zealand dollars also can be considered a major. Is that correct or incorrect?
That is correct. A lot of people do consider New Zealand dollar as well as a major currency, but again, it widens the spectrum, and New Zealand dollar sits at the bottom of the part of a major currency.
Okay.
Some people do, some people don't. But yeah, it does come under the major, it does under the spectrum of major currencies in the world. So including New Zealand dollar, we will be having eight major currencies in the one, two, three, four, five, six, seven, eight major currencies. So it is always US dollar versus all the other major currencies around the world. Meaning, if US dollar goes up, if USD goes up, what happens to all the other currencies?
Go down.
All major currencies go down. This is what happens in FX. So when I say FX is easy to predict, easy to trade, this is what I mean by easy to trade and predict. For example, FX is always in a currency pair. Foreign markets are always in a currency pair. It is not trading individual currencies. What we will be trading here is we will be trading something called as euro against the dollar. This is what we will be trading here. Now, Euro USD is one of the has the highest volume and the most traded pair in the foreign markets, right? And when we look at trading the Euro USD, how will we be trading the Euro USD? It would be Euro. If Euro goes up, the dollar will be going down. This gives us a very easy way to buy the euro and sell the dollar. Do we have to make two transactions? No, we only make one transaction, which means the transaction which we will be making will always be with euro. We don't have anything to do with the US dollar. We always make the transaction with the first currency. Let's talk about something called as base and quote. When we talk about base and quote, we'll take the same example as euro against the dollar. Euro being the first currency, euro is called the base currency, and the dollar is called the quote currency. The reason why euro is the base currency is because the value for the euro is much higher than the dollar. This is why euro is considered the base. The value of the base currency will always be higher than the value of the quote currency. Whereas, just to give you in terms of numbers, 1 euro equals to a dollar 50, a dollar 18. This is what it means. Meaning for every euro, you get $1.18. This is what it means, which means for less euros, you get more dollars. This is what it means. Let me give you another example. US dollar against Japanese yen. This is a second currency pair. USD, of course, being the base currency again. USD being the base currency. Japanese yen being the core currency. What changes is the positioning of the currency, but the position of the base and the quote stays the same. Why? Because as base has more value than the quote. Meaning for every dollar, we have 157 Japanese yen. This is what it means. For every dollar, we have 157 Japanese yen. Somebody might say, why Japanese yen? Japanese yen is called the safe haven currency. Japanese yen is called the safe haven currency, like how we have commodities, gold and silver as safe haven during any uncertainty around the world. Everybody will move towards the safe haven assets, which are commodities. Same thing in Forex. We have Japanese yen as a safe haven currency. And along the spectrum that which we are looking at for all the major currencies, Japanese yen is the weakest major currency as of today. Whereas $1 equals to 157 Japanese yen. So Japanese yen is the weakest currency against all the major currency. This makes it very easy for us as traders to trade US dollar against the Japanese yen. This is what I primarily trade is the US dollar against the Japanese yen. This is what I usually trade because number one, easy to trade, easy to look at the markets, and we only have to look at what the dollar is doing and do the inverse for the Japanese yen. If the dollar is increasing in value, Japanese yen will be decreasing in value.
So it's safe to say that the base currency is always going to be more valuable than the quote currency in every
That is
situation.
correct, sir. That is correct. Yes, in every situation, the base currency has more value than the quote currency. So the base currency stays constant. It always stays one. If it's euro, it will be €1. If it's dollar, it will be $1. If it's Australian dollar, it will be $1 Australian against the quote currency, whatever the value is for the quote currency.
So if the dollar ever got so strong against the euro that it was actually worth more than the euro, so would they reverse?
It is very difficult for it to reverse because again, the currency pairs are fixed, right? If we look at US dollar against euro, this is an inverse correlation, right? Where $1 equals to, I assume, if we look at the charts right now, Euro US USD Euro 0.8, meaning for every dollar we have 0. I think it's called 80 cents in euros.
Yes.
80 cents in euros. Yeah, so this is what it is called. So there's an inverse correlation,
Interesting.
right?
Thank you.
No problem, sir. So the base currency always has more value than the quote currency. Let's move on to why people like to trade Forex markets. Why trade Forex? What is the reason behind people looking at the foreign markets? The reason is 24 hours, 5 days a week. Forex markets are open round the clock for 5 days, Monday to Friday. This is why a lot of people like to trade the Forex market, that a lot of people might be doing a 9 to 5. If they're doing 9 to 5, whereas the US stock market is open from 9:30 a.m. Eastern to 4 p.m. Eastern. So a lot of people might not get a chance to trade because again, they're doing a 9 to 5, so they might be busy working. So a majority of them skip the stock market. That is why we encourage anybody who's doing a 9 to 5 who would like to be a full-time trader to look at the Forex markets and see how the markets are moving because Forex markets gives you a lot of opportunity. They are open 24 hours, 5 days a week, Monday to Friday. Um, and it does have a lot of volume. So the $7.1 trillion dollars in volume comes in these 24 hours. We do have high volume times as well in the middle, but combining the combined volume is for a day in these 24 hours where all the markets are open. Forex markets certainly have lower transaction transaction cost, meaning lower brokerage, right? Brokers do not charge a lot of money. Brokers charge very little depending on what the lot size is or what quantities you place. The minimum brokerage fee is 0.03 to 3 cents to, I would say, 7 cents for 0.01 lot, which is the bare minimum, which is 1,000 units. Again, we'll be deeping dive into it in the future sessions as well as to what lot size is, but this is the bare minimum that a broker can usually charge. Some of the brokerages that I know might not even charge, where again, most they usually say that there is no brokerage. What they might charge is spreads, right? So depending on the account size, depending on which account you select, a standard account or a razor account, depending on these accounts, you can select, would you like to pay the brokerage? Would you like to pay spreads? When we look at leverage, what is leverage? We'll be discussing more on leverage as well. Higher leverage. Let's look what leverage is. Uh, would you like to explain, sir, what a leverage is?
Leverage is when you are borrowing against your initial capital. It's you're borrowing money
From?
from the broker.
Correct. Leverage is the buying power that the broker provides us. Yes, we borrow the money from the broker, meaning uh, higher the leverage,
Higher the risk
higher the leverage, higher the risk, and the reward.
and the reward. Yes.
Meaning what a leverage is a leverage usually comes in 1:50, right? So let's say, for example, leverage is 50 to 1, meaning for every dollar we get $50. Let's say, for example, I have a trading capital of $1,000. My buying power with leverage, my buying power will be $50,000. My buying power will be $50,000, meaning for every dollar I'm getting $50. So how did I get 50,000? Trading capital multiplied by the leverage is my buying power, meaning I can buy anything worth up to $50,000 using $1,000 capital. This is what it means. So you have a higher buying power, you have higher risk, you have a potential to make good amount of money as well, higher reward. This is when we say that foreign markets have higher leverage. But a lot of traders abuse the leverage or misuse the leverage by taking a very high leverage of 1 to 500, 1 to 1,000. And they said that no, we did not make it into FXY because they misused the leverage. They misused the buying power, right? Why? Higher the leverage, higher the risk and the reward. So it is very important that when we take higher leverage, it is very important to be very careful when utilizing the leverage and placing positions, buy and sell positions. I hope this is clear. Let me know if there are any doubts. You can drop down in the comment section. Right, let's keep moving forward. Now, there is something called as PIP. Let me do a quick review on PIPs. When we look at stock market versus Forex, we calculate it in a little bit of a different way, where when we look at stocks, we always calculate stocks in points, right? If, for example, if Apple goes from $100 to $120, we say that the stock has moved by 20 points or $20. This is what we say. Whereas in Forex, in foreign markets, We calculate price movement in pips. Pips is percentage in points. This is the full form for pips, percentage in points. Meaning for every pip, it moves depending on the lot size, you earn X amount of dollars. So how is the pip calculated? Let's take a random number. Let's say Euro USD. Let's say 1 euro equals to a dollar 1.18 USD. This is the actual price as we speak, right? So we're just gonna take this number right here, 1.185. Okay. We're just going to take this number, right? When we calculate, how do we calculate pips here is the last digit is called a pipette. The last digit is called the pipette, which is the smallest change in price. And then comes 4. 4 is once. Once is 4 pips. 5 is tens, that is 50 pips. 8 is hundreds, which is 800 pips. This is 800 pips. Once is 1,000. This is 1,000 pips. And on the left side of the decimal, it comes 10,000 pips. So this is how we calculate pips. This is the calculation for pips. So when we say the calculation of pips is like this, the smallest change in price starts from the rightmost digit, which is called the pipette. The number 7. When 7 changes, when 7 goes to 9 and 0, then the pips start. Then we start calculating from pips. 1 pip, 5 pips, 10 pips. So depending on how much the price fluctuates, we calculate the pips accordingly. This is just to give you a gist of what we will be covering in the future sessions as well. And even when we do a group session, this is what we will be covering in depth. And even in one-on-one sessions where we will be looking at live trades, we will be trading live in one-on-one sessions. We'll be giving you a little bit of a gist of live trading in the group sessions as well. Um, just to know more about these topics, again, you can sign up for whatever the group sessions that we will be having and also the one-on-one sessions, where a lot of people who want to become a full-time trader, they usually sign up for one-on-one sessions as well. They start with group sessions and then they advance it to the one-on-one sessions where we usually trade live in the markets. This is what me and Mr. Maher, we have done. We have been doing for a very, very long time is trading live in the markets together. And discussing about pips, leverage sessions, and would you like to share your experience as well, sir, when it comes to doing one-on-one sessions with pips, leverage,
Yes,
and everything?
one-on-one is extremely exciting, especially when you go live. He helps you open an account, he helps you connect your account with a brokerage. Of course, it's going to be QBN Global, and and he walks you step by step. And also, obviously, you start off with a demo account, so you're not trading real money at the beginning, but it still is very exciting. It's very emotional, and so I highly, highly recommend the one-on-one sessions because that's where I did most of my learning. There's only so much you can do through the internet or through, large group sessions. And the listening and understanding the Forex is the great beginning, but the hands-on is where it really comes into handy. Let's take a mechanic. He's learning in school and he's seeing these diagrams, but if he doesn't have his hands in the engine, he's not going to really learn how to make it work or use it. So that's what you get on the one-on-one. The one-on sessions, you get the hands-on experience. You're trading yourself, supervised obviously by Krishak, and so it's an amazing experience. Thank you.
Thanks a lot, sir. I really appreciate it. Again, I encourage everybody to go on for the one-on-one sessions, for the group sessions where you could understand the markets even in a better way because this is just what we are discussing in terms of the basics. There is a lot more. We're going to deep dive into the leverage as to how can you acquire higher, because there are a lot of people in the markets who would like to trade with higher leverage. They have, let's say, $1,000 and they want to unlock the potential of trading with a higher leverage. So this is what I help them and guide them as to how do you trade profitably with a higher leverage. And if somebody would like to take lesser risk, we go with a lower leverage of 10 to 1, 20 to 1, whereas 50 to 1, 100 to 1 does come on a higher leverage. So it's more on depending how much risk are you willing to take in the markets. So it's all about risk management, because the only thing that you could control in the market is the risk. Risk is the only parameter that we can control in the market. We cannot control the reward. Reward is not in our hands, but what is in our hands is the risk. So when you control the risk, it is very easy for the reward to follow. Why? Because even if you risk 2%, 2% to trade, the reward should always be double than the risk, which is sitting at 4%. This is called risk to reward ratio. This is what makes trading profitable. If you follow this setup, if you follow this setup where you risk 2%, where your reward is double your risk, uh, nobody can lose money in the markets. Even if your win rate is 50%, 40%, you would still be making money. Even if it's 35%, I've experimented. I have tested the system really well, and this is what we do in the live session, in the group sessions and one-on-one sessions. I will run you down through the life system, right? How does risk to reward work depending on your account size, depending on your account capital? So I think
But
we have around about 2 minutes. Yes, sir.
I'd like to add that a lot of people do lose money in the Forex. And I think the biggest issue is they let their emotions make decision than logic. So their emotion takes over. And so if you do a studies, if you look at the studies and do some research, you'll see that many people, especially beginners, lose a lot of money because they don't follow the protocol. They don't follow what they've been taught, by Krishak, or they didn't have good instructors to teach them the right way to trade. And so, in order to control your emotions, I want to throw in a little advertising for my mastermind sessions. um, Wednesdays we have our mastermind sessions that talks about emotions, about controlling your mindset and your emotions, and so that I think that works hand in hand with the Forex, and learning and trading is being able to control your emotions and be able to follow the instructions that Krishak has implemented. And so I don't know if you want to add anything to that.
I 100% agree, sir. Again, psychology risk management is does it's actually a main pillar for foreign markets or trading in general, not just for foreign exchange, but for risk management. Psychology is a very important factor, and I would encourage everybody who is on this call to join Mr. Maher's mastermind, because it will not only benefit you in your day-to-day life, but also in terms of trading, because trading is all about mastering our mind. We do have a number of strategies online. We have 5, 10, 1,000 strategies online. But what separates a profitable trader to a non-profitable trader is the mindset, right? Is the mindset from greed and fear. So
Thank you.
thanks a lot, sir,
Go
for
ahead and
adding this in.
stop sharing, and
Yep,
we'll wrap it up.
I mean,
Okay, fantastic. So 30 minutes, as we promised. We're going to keep these sessions to 30 minutes. And we say in QBN we have the success formula of the 444 at the end of every presentation. And so these mini sessions of 30 minutes, there are going to be four of them, one preceding another. So we're going to have four 30-minute large group sessions. And to take a little deeper dive into what Forex is, we have small group sessions that are $25. They're normally 50. We're giving all of our QBN members a 50% discount. So if you're interested in taking the small group sessions, that will be the time where you can actually have one-on-one talking, conversations, and interacting with Krishak instead of just listening what we do here. So highly recommend, if you're interested in learning more about the Forex market, sign up for the small group sessions. There's only 4 per group, and it's only $25. Go ahead and reach out to corporate, reach out to your leader that you're interested, and we'll get you signed up. And once we get 4 people in the class, we'll go ahead and get those started. And from there, of course, we have the one-on-one. If you're interested further and want to start trading and opening an account, then we have that one-on-one sessions. And if you want to go straight to the one-on-ones, that's also available for you as well. Krishak, thank you again for your leadership, for your knowledge that you bring, for opening our minds and our eyes to what Forex is about. Thank you, everybody else, for being on this call, and we look forward to seeing you next week.
Thanks a lot.
Uh-huh. Bye now.
Bye bye.